Hi, I'm Aaija Manoj, currently doing my postgraduate program at Indian Institute of Management, Tiruchirappalli. Today, I'm going to talk about the issues faced by the banking sector in India. As per the RBI, India's banking sector is sufficiently capitalized and well regulated. The financial and economic condition in our country is way better than many other countries. Indian banking system consists of 26 public sector banks, 25 private sector banks, 43 foreign banks, 56 regional rural banks, 1,589 urban cooperative banks, and 93,550 rural cooperative banks. These are in addition to the cooperative credit institutions in the country. Nearly 80% of the market is under the control of the public sector. This is spearheaded by the State Bank Group. In July 2016, the government allocated 22,915 crores as capital infusion to 13 public sector banks. This was in order to improve their liquidity and lending operations and also to improve their economic growth in the country. Amidst all these reforms, RBI in its Vision 2018 document aims at encouraging electronic payments across sectors, increasing digital transactions and also boosting the customer base for mobile banking. In between all these reforms, the banking sector is still facing a lot of problems and issues. The first and foremost is the customer experience. These days, it's all about the consumer satisfaction. All banks are feeling the pressure because they are not able to deliver the level of service that the customers are expecting from them. Especially this is with regards to the technology front. Bureaucratization is another major problem faced by the commercial banks. This is mainly because of the nationalization. The smooth functioning of banks has been hampered by red tapeism, long delays, lack of initiative, and also the failure to quick decisions. Regulatory pressure faced by the banks due to increase in requirements continuously is another major issue. Due to this, the banks need to spend a large part of their budget on being compliant and building new systems to keep up with the escalating requirements. Banks not making enough money is another problem. Even though there are news about profitability in the banking sector, most banks are not able to make enough return on investment or the return on equity that the shareholder is required from them. There are a lot many contributors to this. One of them is the large overdues faced by small branches of commercial banks. The former government's decisions to waive farmers' loans amounting up to around 10,000 crores has added to the plight of these banks. The high proportion of non-performing assets or outstanding dues to the banks from the borrowers are another reason the banks are incurring losses. Most banks are not even able to maintain the capital adequacy ratio. Political pressures that the banks face in lending to people who are unable to repay the loans are another reason. The competition in the commercial banks that the commercial banks face from other institutions like non-banking institutions like Muthoot Finance and companies of that sort, and also the foreign banks are adding to this issue or the crisis. These banks, foreign banks and institutions compete closely with the commercial banks, attracting public deposits by offering them a higher interest rates on their deposits. These challenges and issues continue to escalate. Hence, the traditional banks need to constantly evaluate and improve their operations to keep up with the fast pace of change in the banking and financial industry. Thank you.